with investors. Matter of fact, you're talking about discounts. I'm working with specific investors that those kind of people hate off market. And what we're doing, we write literally 30 to 50 offers a week.
Wow.
We send a lot of offers. I can tell you that agents on the other side don't like me too much. it's maybe it's kind of caused me some trouble with our fellow agents in the market. But in the end of the day, I look at it as it's a business decision. It's a business decision. At the end of the day, sellers have to decide if they want to sell it, if they're motivated or not. So I really test motivation.
Yeah, love that.
Like deep. The percentage are low, honestly.
Right.
But out of 30 to 50 offers, we catch about one or two. So, and this is wonderful because we are in a very quality average rate of helping those investors to purchase between 2 to 3 homes every month. And what they're doing, their entire methods are fix and flip. They're coming in, they renovate it beautifully, and I put it back on the market and I sell it for them for profit.
That's great.
So over there, this is what's happening. And I want to tell you that I saw a trend of 30 to 40% discount on MLS on the price.
Yep.
So it's very surprising.
And so this is why I think I was watching something from Ryan Serhant from $1 Million Listing where he's selling a really expensive property.
Right.
And the buyers were using some AI tools, the sellers were using AI tools, and it basically caused the deal to not happen. The AI tool was saying, hey, you should be selling it for this much. You shouldn't be paying this much for the buyer. And so basically, without that broker getting involved and actually helping coach and guide, the transaction wouldn't have happened. And so you'd have an upset buyer and seller. And at the end of the day, they came to the table and it made a good deal for both parties. So
Yep.
I think that's why it's really so important to find the right broker to guide you that's got a lot of experience of writing contracts, finding offers. Because to your point, if you're going to buy a house right now, you might pay a little bit higher interest rate. However, there's always an opportunity to refinance down the road. Just looking at statistics of a typical buyer. So somebody that owns a house right now, they've lived in that house on average of 12 years in Texas, which has gone up dramatically over the past 5 years.
Of course.
Since COVID, it's gone up. It used to be 7 years.
It's doubled itself. I mean, honestly, look at the time of COVID, and after 2-3 years, the market really doubled itself. It's starting to relax. It's going down. And I think it's good for the homeowners because property tax is also on an increase, including insurance.
So
you process all those insurance and property taxes.
Insurance raising, taxes raising, costs of buying
Cost of
properties.
living.
Everything's going up, so that's why people are staying in their houses longer, right? So what happens is naturally equity is also increasing because people are staying in their houses longer. So
Yep.
There's a ton of equity sitting underneath the foundation of these homes, and it makes sense. Hey, if you've got life events that are happening, there's things that are happening where the typical homeowner is sitting on a ton of equity in their house. And instead of just burying that stuff underneath the foundation, I always recommend to people, pull that money out, whether that be sell your property. Right now is a great time to be a buyer. So if you don't want to sell, you could cash out, you could pull some equity out, you could do a home equity line of credit, you could do a cash out refinance, get that equity to work, and then now's a really good time to buy. So take some of that equity and go buy another property or invest it in the market, etc. There's so many things that you could do.
Do you recognize any signals? This question is always in my mind, so I wanted to ask you about it today. I mean, do you notice any signals of 2008, like subprime crisis?
No, 2008, they were doing 100% loan to values. All the
Wow.
banking industry got much more conservative when they're doing that. So now when you're doing that, you've got to leave equity sitting in your property so that nobody gets, so if equity continues to drop, nobody gets too far upside down. So what that tells me is the banks never anticipate the appreciation to fall below 20% because they'll let you borrow up to 80% of the total value of the house.
80% total value of the home, including first mortgage. So it's going to be the first mortgage and the ELOC mixed together.
That's correct.
That's good to know.
And in Texas, we have a very unique state. If you've ever done a cash out refinance or a home equity line of credit, you cannot get another one for 12 months. And then if you have an A6 tied to your property, you can't have a cash out refinance and a second lien at the same time. So you can only have one instrument pulling equity out of the property.
Does investor can do cash out refinance or just only homeowners?
We can do cash out refinance for investors. So DSCR, bank statement loans, like we get super creative. And that's why I said, for everybody that's focused on interest rate right now, I think what people should be focusing on is the right loan solution, how to structure the deal the best way. whether we put it in a person's name or a company name.
What's the rates on the non-conservative, the non-conventional loans like DSCR? What is it? The bank statement. What is the average rates?
Obviously, rates are so dependent on down payment, credit score. Even if you're going to put the property in a business name, there still has to be a guarantor on the loan, and we use that guarantor's social security number and credit score.
So it's like a personal guarantee, pretty much.
Yeah, basically a personal guarantee. But the rates right now, as we said, they're fluctuating in between the 6s and 7s. And that's one of the things that I like to do is whenever I'm looking at these, we do a return on investment calculation. I have a presentation that I put together, and I show a few different options, 3 or 4 different options, and I work with the buyer on, does it make sense to pay for points? Does it make sense to take a higher rate? What's the plan with the property? Maybe it makes sense to take a super high rate, get the bank to give you some money for your closing costs if you're going to only have the mortgage for 7 or 8 months.
Gotcha.
So it really depends on the situation on what I recommend. And then we do some calculations on the back end to say, for example, if you're going to live in this house for 8 months, you should do this versus this.
I don't ever slow up, no, I don't take shit. I got no